What's the best way for investors to proceed right now? Let's get to the floor show. We've got Huntington Private Bank's Director of Investment Management, Chad Oviatt, along with Circle Squared Alternative Investment CEO, Jeff Sica, who just scooped up some of this week's debris in the form of, Lam Research, SMCI. We'll get to that in a minute. But, Jeff, what do you do if you woke up this morning, saw the second day of gains, and then this afternoon we're seeing the car go off the tracks?
Well, Liz, I was having a very hard time being happy about the rebound yesterday because I think there's so many underlying problems that are beginning to bubble to the surface. What happened in Japan with the worst stock market decline since 1987 when they halted the stock and bond market, there is something underlying these market declines. There is a credit crisis in the making. So I would say, yes, I am trying to scoop up some of the degree. You know, I still have that trader mentality every once in a while, but I'm doing it very tentatively, knowing that there is something on the horizon that is going to take us down another notch.
Okay. How do you feel about it, Chad? I mean, when you look at not just the sell-off on Monday, but the positives of it, which bring valuations a little bit closer down to earth, are you comfortable with that?
The key here for our clients is to not be reactionary. This is one of those moments in time where you recognize diversification still matters. We've been focused a lot on the equity conversation, but bonds got a great bid on Monday. And so that diversification for our clients helps to buffer in times of uncertainty like this. And really, we are looking for an opportunity to trim some positions, add to others. And this is a little bit of a reset for us.
Were you smart enough to trim positions when Buffett trimmed his position over the past couple of weeks in Apple after an incredible run-up?
You know, interestingly enough, our risk controls, how we build our portfolios, automatically we're underweight some of those bigger names, some of the bigger positions. And that created a little bit of a lag in performance, obviously, but some of the more recent market activity has been to our benefit.
So you're less the trader. Jeff, you have that trader DNA within you because, oh man, all of those years that you spent on Wall Street as one of those guys on the floor going buy, sell on really dramatic days like what we saw on Monday. Today, you bought, as we said, Lam Research, SMCI, I believe a little bit of Tesla. Let's start with SMCI, which is just swooning at this hour. This is still a great AI data center company. So when Chad references overreaction to a downside move, why did you pick this stock beyond the obvious?
I think when you look at it, the stock, when you look at the amount of sellers, there were a lot of momentum players in it. There's a lot of concerns about the NVIDIA CPU, GPU being delayed. That is a concern, but there is still this pent-up demand in their cooling systems. And I just said, when this stock falls under $500 a share, after it was up around $1,200, falls under $500 a share, that's the time to jump in.
This second, it's 501. Did you catch the 500?
Yeah, I mean, I look at, I shouldn't do that. I wish that part of me would just go away. But I still have that element of trying to when people tend to buy, the momentum on the upside tends to be exaggerated. It's the same on the downside. This is not for the faint of heart. This is for people who want to be in a stock that has future AI, memory. There is an unlimited potential in the future, but the hype was too much. I had said over a month ago that there was going to be a pullback. We're having it now. I wouldn't put an entire position on, but I would begin to chip away at it to build a position going forward.
Yeah, you got to have a strong stomach. Don't be faint of heart, just like Cleveland Brown fans, right? And Chad, you grew up in the great state of Ohio. Well, let's talk about what you are adding to your clients' positions right now. What do you like?
Yeah, so we're taking kind of a barbell approach to our portfolio construction, saying technology still has a place in our portfolios, and that's the growth engine, right? We don't think technology is going to take a step back, but then we're looking at things that maybe are possibly derivatives of the AI boom, like an AES, where data centers are going to need more power. We're also looking at some of those kind of classic companies, in our opinion, that reward shareholders with either buybacks or consistent dividends. So like a Sherwin-Williams or a Coca-Cola, which was on the board. You know, those are types of names that we like to add to portfolios, particularly in times of volatility, because you have that dividend component.
Well, sure. Sherwin-Williams down 1.25%. People are still going to need paint. I mean, obviously.
And think about the existing home sales. They're so low. The longer you stay in your home, maybe you need a fresh coat of paint on that dining room.
Hey, great to see you both, Chad, Jeff, on as we said, kind of a whiplash day.